July 31st, everyone, the last day of the month for July. So the purpose of this video is to go over how I seek speculation. Maybe not how you seek speculation, but if I decide to speculate, these are some of the things I look for. So this week, EZGO mooned on Monday, and then AHPI, Allied Health, went through the roof yesterday. So after AHPI went through the roof, already on Monday when EZGO went through the roof, I had a lot of people on Reddit, a lot of ultimate traders ask me, what's going on, what's the next one, why, what I do, how. And then after AHPI, even a couple of people on Twitter are reaching out to me and saying, hey, what's the next play? How did you do it? How did you find it? So you guys at YouTube, you guys and ultimate traders, the elite premier place on Reddit. I repeat, the elite premier place on Reddit are the only ones going to get this video. Why? Because on Monday, after EZGO went on fire, more than 18 million shares traded, went from $3 to $5. All I did is go back to a post that was on Stocks Forum where they were heavily against Chinese stocks, and I said, hey, EZGO is on fire. Me and the team, the elite team, are trading it. Boom, ban. So I got to be careful where I post, even message. There was no link. There was no video. It wasn't self-promotion. If you read the context, this was because everyone was against Chinese plays. And I believe the only reason why EZGO didn't keep going up the next day, the next couple of days, is once again, everyone was against Chinese plays. Hopefully that ends soon. But the purpose of this video is, how does Nathan, the original ultimate trader, speculate on why? How did I go with EZGO? How did I pick AHPI? Okay, so my definition of a speculative stock, a stock that does not make money. Even if the company breaks even, is speculative. Why does Nathan, ultimate trader, call it speculative? Because the only way you make money is by you speculating. You could sell it to the next person for more. Why is that? If the company is not making any money, they will not give you any dividends. So a dividend is when the company is making some cash and they decide to share it with everyone. Share it with everyone. Because the only reason you originally invest in the stock market a long time ago, the only reason anyone invested was to gain a little profit by investing into a company that makes money. So that's one thing. Also, a company needs to make money in order to buy shares if the stock drops. They could also make investments of buying other companies. That's another thing. But the reason why a company is speculative is, the main reason why a company is speculative is they don't make money. The only way you make money is by selling it to someone else. There is no chance that that company is making money. But there are reasons why you speculate in certain specific stocks. I'm going to go over that. So the stocks that I do speculate on, and I am trading a couple of memes, but I scalp on the memes. Like the high momentum plays, I rarely hold more than a minute or two. I scalp. And I'm not a scalper, just on the memes, on what I'm going to be calling the unshortables. Well, actually, unshortables, you don't have to trade really quick. But going back into what I pick and call speculative stock. So also, if your company is making money, but your PE ratio is 100, what that means is right now, the stock is trading at times what they make. Now, ask yourself, would you loan $100 to your friend if they were going to pay you back in 100 years? No. So why would you buy a stock for $100 and they're making $1 or less? Because at the rate of today, and there's a trajectory, there's other things, but I'm saying at the rate of today, the company is making $1 per share, and at the rate of today, it would take 100 years to pay you back. So is that speculating? Are you hoping another person will buy it for more? Yes. So it doesn't have to be that the company is losing money. If the company has 100 PE, you're speculating. To me, Nathan from Queens, I do not give more than 60 times what a company is making. If I do, it's because the market is on fire and I'm trading it today. It's a hot stock. I'm trying to make $1 or $2 quickly. Maybe not scalp, but I buy it in the morning and sell it off in the afternoon. I might hold it the next day if it has some fundamentals, but definitely not long term. So back into companies like a EZGO. Okay, so the reason why I've been trading EZGO and I've been telling the ultimate traders, the elite team, let's go with EZGO, is because the company is growing near 100%. The market cap right now is only 40 million. So what were sales last year? Last year sales were about 5 million, and now sales were 9.5 million. What is the trajectory? It's going higher. Also, what you should know is when they made those sales last year at the same time of 5 million, the company lost 6 cents a share. 6 cents a share. And this time, sales went up 75% and they lost 3 cents. So the company actually sold more vehicles. They do the e-bikes and lost less money. So what the trajectory is up. Is up. Why do I speculate on something like Kang? Kang is growing at 200%. They're losing money, but they're growing at 200%. So Nathan's rule is you could speculate when the stock market is on fire, the NASDAQ is green because the NASDAQ consists of a lot of tech and growth. If the NASDAQ is really green, you can buy a stock that doesn't make money if they grow at least 60% year over year. So what are you doing? You're looking at earnings reports, like the last earnings report, and right now it's earnings season, and check the year over year sales. If the year over year sales is over 60% and the company is losing money but is on the right trajectory, I would speculate. So if you like this sector, right now it's earnings season, or you like a certain stock, check your calendar, like on TD or E-Trade or Fidelity, check your calendar, check the earnings reports, and if it beats on top line, which is sales, it beats on bottom line, which is profit, by 60% sales, and year over year they're earning a lot more money, add it to an earnings watch list. I have an earnings watch list, and I take it from earnings watch and I move it into plays if I'm ready to trade it. So back to speculating with AHPI. AHPI is not making money. You know, the last report they made a tiny bit of money, but growth was tremendous. What happened is 2 weeks ago, not this week, 2 weeks ago, the Delta variant was all over the news. The market was down heavy on a Monday 2 weeks ago. So what did I do? I was trying to trade Lakeland Industries. And the reason why I have AHPI, just like I said, with Earnings Watch, for me, I look at 3,000 reports each quarter. I might not look at the report, but I look at results of 3,000. If any company is growing sales at 50%, I take a look. Because if you want to make a lot of money in the stock market, I am sorry to say, you must look at reports. You must read earnings. I know no one likes to do it. Everyone says they want to be a millionaire, but who puts in the work? The one that puts in the work is the one that already knew about AHPI. So I was trading before, 2 weeks ago. I was trading it back and forth, back and forth. I still try to trade Lake too. But after I sold Lake, it's been going higher. It's been going higher. So AHPI is a cheap man's Lake. But the growth is there. And the money is going to be made. Now, Lake is not speculative. Why is it not speculative? They make cash. Last earnings report, they destroyed. They bought back $5 million of stock. Okay, you might not say $5 million is a lot, but Lake doesn't trade a lot of volume. So $5 million for them is a big boost in the stock. Where's it now? 27. Where was it a few weeks ago? 20. What was I doing? I was trading it. I had 2 blocks, one at 23 and one at 24. So those are stocks you could speculate. Am I speculating on NLS? No, I am not. Last earnings report, it grew at 120%. And their financials are stronger than ever. Is it $15? Under 15? It is not speculative. It is, I'm sorry to say this, but retarded to think it's going to go lower on the next earnings report, which is in a week and a half from now. Come on. $130 million in their bank account, $15 million in debt. And they got a lower interest on their credit line, revolving credit line. Where was it 2 quarters ago? It had about $80 million in cash and about $40 million in debt. So now 120 million cash and 15 million in debt. So the financial is stronger. NLS has reviewed my videos, my emails, my comments. I was telling them, listen, I understand last report was awesome. You guys didn't buy back shares because you thought the report would show other investors to come in and buy. It didn't. The stock is down. It is time to buy back shares. Just like Mr. Cooper with a mortgage company. Okay, they're not happy that Rocket missed by a penny, just a penny, and lower margins, and all the mortgage sector got crushed altogether. What did Mr. Coop do? On Friday, a $500 million buyback that's going to start next week. Okay, so back to speculation. I am not speculating on LS. Why? Because they make money. So remember, a speculative stock is something that does not make money or has a very high PE. Now, I'm sorry to say, this is YouTube. This is not Reddit. But if you own something like AMC or GameStop, it's your money. Do what you want to do. You could trade it. You could diamond hand it, whatever, and try to make money on it. My thing is not to hold it overnight. Just keep trading it. Keep trading it back and forth. One of my elite traders traded AHPI 20 times. Yes, 20 rounds. Okay, the stock was a $7 stock. So if you traded it 20 times and you made close to $3, you already almost made what the stock was trading at, $7. Okay, so there's no reason to hold it diamond hands. If you trade again another day, I think he traded even before. You made $3-4 on it. Why would you diamond hand it? Just keep trading it over and over again. The reason why I say is, I'm sorry, when AMC and GameStop earnings come out, there's no earnings. There's no money made. AMC is losing money. They are burning cash. Their financials are awful. So you're just speculating. You're just speculating at GameStop too. GameStop is what, $165? To me, 60 times the most I would pay, 60 times. So what does that mean? That means that GameStop should be making $3 a share. They're losing money. Losing money. They're supposed to be making 3. And to give a company 60 times PE, the company better have very good financials and growing at 30-40%, not decreasing sales for 7 or 8 years straight. So Do what you have to do. This video was about speculation, and you guys, the ultimate traders, are getting the video. Only you guys. And I'm going to be posting on Reddit right now, but you guys are going to get most of it because Reddit, the mods are scared. What are you going to do?